Hello there. Welcome back to Introductory Accounting and 4. In this video, we want to look at the preparation of the notes to the balance sheet and also the preparation of an extract of the balance sheet. So, the very question that we have here, which reads that following trial balance appeared in the books of Karibu Kumeza on 3rd January 2017, and then we are given the required part. So, part 4.1, we are not going to look at it. We are going to concentrate on 4.2. So you'd see that, but we are going to use a figure from 4.1.5 of net profit or loss for the year, which is 18,430, which is the net profit for the year. We're going to use it on the preparation of the notes to the balance sheet. So if you go down, you'd see that we are given a question 4.2, which you want to look at. In this question, draw up the balance sheet for the year ended on 10th January 2017, show only the liability section. So this is an extract. We are only going to show the liability section. It has got 4 marks. Then we also have 4.3, which you want to look at according to this video, which says show the notes to the balance sheet. So this is what we have. So we are going to also show the notes to the balance sheet. So if you go down, you'll see that we're given a trial balance of Karim Kumes on 10th January 2017, which is balances that are going down. Then we've got additional information where we have only given one additional information, which means the merchandise was valued at 97,190 rands after physical stock taking on 10th January 2017. So this means this is our closing stock. So this is representing our closing stock, which we are going to use in the balance sheet. So the question is 14 marks of notes to the balance sheet. So we are going to go to our answer section. We are going to go to our answer section, and on our answer section, that's where we're going to write our notes. So on our notes, we are going to list all the non-current assets that we are given. Remember, if you go to our question, the fixed asset that we are given or non-current asset that we are given, there is no depreciation. So we are just going to list. We are assuming that the figures that we are given there represent the carrying values of those non-current assets. Remember, in the balance sheet, we will show the carrying values. So we are just going to list all of them. We have got land and buildings here. We have got equipment. We have got vehicles. So we have got land and buildings 141,300. Equipment, we have 123,550, and then we have got vehicles 91,250. So we can just go and list them in the property, plant, and vehicle note. So we go there. So I believe this description we are just going to start with our land and buildings. Right, for our land and buildings, we are going to list the amount that we have for land and buildings, which is 141,300, and then I believe that we have got our equipment. With an amount of 123,550. And then we also have our vehicles. So we say vehicles. And then the amount that we use is 91,250. Right. So we can now remember these are all the fixed assets that we have in the question. So we are going to add our 141,300 plus 123,550 plus 91,250. Then we get our total, which is going to represent the total for property, equipment, and vehicles, which is going to come here in line with our property, equipment, and vehicles, which is going to be the total of 356,100. If we go down, you see that this is now our notes for property, equipment, and vehicles. Remember, the notes are to the balance sheet comes as pre-calculations that we do before we prepare the balance sheet. So what we are saying is, when we transfer the figure for property, equipment, and vehicles in the balance sheet, we're going to make a reference that we've taken the answer from or the representation of the value from note number 1. So we're going to mention note number 1, and the figure that we are going to transfer to the balance sheet is this figure for total figure for 356,100. So this is what we this is our note 1. Then we go to our note 2. So on our note 2, we are going to calculate the figure for stock. So the figure for stock, we go to the question to identify, because remember we said the figure that is shown in the balance sheet is the figure for closing stock. And it's always given as additional information, which is here. I mentioned the merchandise was valued as 97,190 after a physical stock taking on 30 January 2017. So we take this 97,190 as our figure for stock. And this is our trading stock. So we come here and we give a description of our trading stock. And the amount that we have for trading stock, it's 97,190. So this is the same figure that is going to be come as total for stock. So we are saying if you come here, we are saying the total for stock that we have will be the same, because we are only having trading stock as part of stock. In some questions, you might have consumable stores as part of stock, or stationery as part of stock, that we need to include it here, then you get the total for stock. So here, 97,190 is our total. So we say 97,190. So this is the figure that we are going to transfer to the balance sheet as our stock, and then we make reference that we are taking it from note 2. So this is what we then we go to the next one, which is the next note. So on our note 3, we are going to calculate the figure for cash and cash equivalents. For cash and cash equivalents, I put all, if you have got a bank account with a debit balance, it's also part of cash and cash equivalents. I paid cash, we also include it. And then also you've got the cash float, if it's there, we are also supposed to include it. So these are the items that we're just going to look at in the list of balances, or the trial balance that we are given there. So we go there. So we go looking for those under the balance sheet section, and going down, we'll see that we've got bank here. But this bank has got a credit balance. So if it has a credit balance, the bank overdraft, and we're going to put it under current liabilities. But if it's a debit balance, we put it under cash and cash equivalents. So in this case, we're going to put it under current liabilities. Then we've got paid cash. Paid cash is also part of our cash and cash equivalents, 1,155. Then we've got cash float, 945. And then we see that we have nothing left there. So we're going to pick this as our cash and cash equivalents. Then we go there. We have our petty cash. And then our petty cash figure is 1,155. And then we have cash float. And the cash float figure is 945. Then we add the two together to representation of cash and cash equivalents, which is supposed to come here, 1,155 plus 945, get to 2,100. So this is the figure that is going to go to the balance sheet as our cash and cash equivalent. And then we make a reference of note number 3. So we go to the next note, which is now the capital note. So on the capital note, we are just going to employ the formula that says, so closing capital is equal to opening capital, we add net profit. If there are any additional capital that is there, the question, add additional capital, we less our drawings, and then we get your closing capital. So the closing capital is the one that is going to go to the one that is going to the balance sheet. So this is what we have, and then we can just try to use that formula to calculate the figure for closing capital. So here, what we are going to start with, we're just going to say capital, which is going to represent our closing capital. Then we make the calculation beneath, whereby we're going to start with our balance at the beginning of the day, which is our opening capital. Balance at the beginning of the year. And then we are going to put our figure here. So we can check that balance in the trial balance. Balance at the beginning will be given in the trial balance. Remember, we've got capital. in the balance sheet section, which is 382,800. So this represents our opening capital, which is balanced at the beginning. And we are saying it's 382,800. And then we add net profit, remember, according to that formula, plus net profit. And we said net profit was calculated in the first part of this question. And the first part, we are not going to do it according to this video. So we can just take the figure for net profit that we have there, which is 18,430. It was calculated here. And we are not going to prepare it according to this video. So we just take 18,430 is representing our net profit. So we come here. We are getting it as 18,430. Then we add there to get the total. 382,800 plus 80,430, you're going to get your 401,230. Then here we go to we less drawings. Remember, the question does not have additional capital, so we are less in drawings. Now we check the figure for drawings. And balance sheet section again. So you see that on balance sheet section, we're given the figure for drawings here is 17,000. So we come here. We are seeing 17,000. And we are saying less, so we're subtracting. We'll subtract there. The figure that we get now, we say 401,230 minus 17,000. We get the closing capital figure, which is supposed to come here as our closing capital figure. And the figure is 384,230. So these are the notes that we are preparing according to this video. These are notes or pre-calculations that are prepared before we start to prepare the balance sheet. So if you come to the balance sheet section now, let's just try to see in terms of the balance sheet section. So this is our balance sheet section, and we are saying it's an extract whereby we are only showing the liability section. So remember, this column is going to be our notes column where we're going to write the note that we are taking our figures from. If the item had notes that were prepared for that figure, then we're going to start with non-current liabilities. So we say non-current liabilities. And then the figure that we are going to put there, obviously, we're going to look for the lead figure for loan in the trial balance. So loan, you see that we got loan here, Kamba Bank, 11%, 22,160. So we have got 22,160 being our loan. So we're just going to have our loan, and it's only one that we have in the question. So we say loan, Kamba Bank. Let's just try to see. Loan Kamba Bank, and the figure that we have for loan is 22,160. Then we go to the next section now is going to be our current liabilities. Remember, we're only including our liability section. So here we are saying current liabilities. Then other current liabilities, we are going to look for items that are part of current liabilities. So remember, the first thing that we put under current liabilities is trade and other payables. Trade creditors, which is creditors control, is one of the trade and other payables, which is 7,400. And we look for other payables. Other payables include accruals of expenses, or prepayments of income are also part of other payables that we should add there. So we see that in our question, we don't have such. So we're just going to take our creditors control as trade and other payables, which is 35,400. Here we are saying trade and other payables. And then the figure that we are using there is 57,300. Then after that, we also check for other liabilities that we have in the question. Go again to the list of balances under the balance sheet section and look for other liabilities. So we've got a bank balance that we said is on the credit side, so should go under current liability. So this is a bank overdraft that we are supposed to put there, 57. Let's just try to look at the figure there. So we have our bank here, which is 57,300. Come here, we include bank overdraft. So we say bank overdraft. And we have let's try to see the figure that we are using. Okay, bank overdraft is 57,300. So it means our trade and other payables is not 57,300. Let's try to see. That's the figure that we got for bank overdraft. Then trade and other payables, we check in terms of the creditors control figure that we are having. If it's 57,300, which means we made a mistake there. So our creditors control, we are given this is 35,400. So we're going to check 35,400. So here we are seeing 34,000, 35,400. 35,400. So this is what we have. And then we've exhausted our current liability, so we can now add 7,400 plus 57,300 to get the total, which is going to be your 92,700, which is supposed to come here for current and liabilities. So having that now, remember, we are question, if you go back to the question, let's try to see. The requirements of the question is saying, in terms of the balance sheet, let's just try to see what's the requirement. Saying the draw up the balance sheet for the end of 30 January 2017, show only the liability section. So we're just going to add the total liabilities so that we get the total liability. So here we are having total liabilities, whereby you are saying non-current liabilities plus current liabilities. So we come in, obviously, put our line, show the total. So we are saying 22,160. And then we add your 92,700. And then we are going to get your 114,860. 114,860. So this represents your total for liability. So this is the end of our question. Let's stay tuned for more videos to come. As for this video, I'm signing out.